Have you ever imagined what it would feel like to be able to trade like the big banks do? To trade like these hedge fund managers or the top traders on Wall Street? Well, wonder no further. Today, I've got you because I'll be breaking down support and resistance, showing you how the banks do this day in and day out on the financial markets. If you're struggling to make consistent profits on the market and you're actually not understanding price movement, it simply means you're missing a big part of the puzzle. Now, what part of the puzzle could this be? Literally, it's support and resistance. Support and resistance can literally be your go-to in understanding price movements, understanding when to buy, when to sell. But listen, it's not just support and resistance. There are other confluences that plays a vital role in the process. But you know what? Today I'll be breaking it all down to you, and I'll actually be showing you real life examples on the charts and giving you strategies that actually work when it comes on to identifying and mastering support and resistance. And if you're new to this space, I'm Kerry, and listen, I'm gonna be breaking it all down for you. So grab your popcorn and let's get right into this. Let's get on the charts and let's understand how to identify support and resistance the real way. Come with me as we break it down. Hey YouTube family, welcome back. We're back in the building and we're on the charts again. And today I'm going to be breaking down support and resistance for you so that you fully understand how to master support and resistance. And guess what? At the end, I'm going to be dropping some support and resistance strategies that you probably even don't know. So I'd suggest that you stay until the very end of this video so that you can get these strategies, back test them, and literally use them to clock profits in the markets. Now, as I've stated before, it doesn't matter if you're trading Forex, crypto, stocks, you name it, support and resistance should be something that you literally master because the market moves in waves. We've got these ebbs and flows, and we've got a lot of support and a lot of resistance going on right through the entire chart. So you're now wondering, if you're a newbie, what is actually support? Support, I want you to consider this as the floor for price. Where did price actually stop to turn around? So literally, you're looking for what we call the support area. Now, I'm going to show you it here. So we're currently on Euro USD, right? And literally, we've got price at this area. Now, you have support here because price is failing to break through this area. So what I'm going to do, yeah, I'm going to use a rectangle to highlight this area so that you can fully see it, right? Right here. Now, if you look across, you'll realize that this area of support, it has been tapped multiple times. So we do have some rules when it comes on to identifying support and resistance, and we'll get into that very, soon. But I want you to understand that support is literally the floor for price. Where did price go and turn back, right? Now, if you look to the top, this is where we'll have a bit of resistance. Now, as you can clearly see here, this is the ceiling. So I'm going to use another rectangle to make that area there. So this is our current area of resistance. We're failing to break above this price range. We're failing to push above, and we're actually, seeming as if we want to turn back. right? But at this time, this is our current resistance, right? This is where our ceiling is, and we actually have support right at this area here. Now, one of the key thing that we want to go into is the rules when it comes on to, identifying these floors and these ceilings for price. And here they are. So let's kind of break them down so that you fully understand them. All right. Now, we're looking for multiple rejections at the area. Now, if I zoom out, when in doubt, we always zoom out. I could drag this across, and you could literally see that we had the same thing going on previously at this area. Now, what had happened is that here, right here, was our actual previous resistance. And what did price do? Price literally broke through it. All right, so this was our previous resistance. Price was failing to break here, and we've got multiple rejections. 1, 2, 3, 4. Multiple rejections right at this area. Price failed to break higher, but then what happened? We got a break of that area. And once we broke, right, we break, we retest. What did we do? We went back into this previous area that was one support. It's now becoming resistance, right? So this is also another rule. When you have these zones that were previously support, so they were previously the floor to price, once we break through, we come back, we retest, it becomes the ceiling, which is resistance. So support becoming resistance is a key part of identifying these zones, because these zones are really ideal and really effective when you see that they have been broken through, now becoming resistance. That's telling you a lot about this entire area. So you want to highlight these areas that become, right, support, and then they turn into resistance, or vice versa. You're also looking for areas where you've got multiple rejections, right? So if we were here, multiple rejections, if I drag this across, you see that this was coming from previous areas as well, all right? So you're looking for areas where you've got multiple rejections. So we've got multiple rejections as one. Now we want to see price moving away aggressively, right, from a swing high or a swing low, because that's going to be a key area of interest to us. Now, if I zoom in here, this is a swing low. And what do you realize? Price is pushing all the way away, up, and away from this actual swing low, right? So this is a key area here for us to kind of zoom in on, because this zone is no longer valid here as a resistance, because now you've got price that is actually sitting above here. Now there is potential for market to actually come and do this before it bounce, but that is something that we will kind of anticipate. All right, we'll anticipate something of the sort for our actual trades that will probably be coming up on the charts. Right. So with that said, I want you really to understand that support and resistance is something that you must master. You can't be putting lines all over the charts and not understanding where your support is, where your resistance is. You're currently looking at where price is right now, right? Where is price right now? Price is here. So this is your area that you're zoning in on, because you're having some rejections right at this area, and you previously had this area that is now becoming resistance. It was previously support, right? So we've got these multiple rejections. we've got price moving, massively away from this swing low, and we're probably anticipating that it will move the same way from this swing high that has been created. So we keep it simple. Support is the floor, resistance is the ceiling. Okay. Now you do have here, right? Here is actually a support zone. But one of the key things that I love doing, and I really, would anticipate that others are doing the same thing on the charts, we look for current zones. Because before the market passes, before it gets to here, it's gonna have to break through this resistance, right? Or this support rather. Before the market gets to the next level, it's gonna have to break through the support. So if the support comes back at this area and it's holding, we're gonna get a bounce. All right. So before you can get to the next area all the way down here, you're going to have to break through here. So that's why it's very important to look at where price is currently and use those zones as your go-to, because here is where you've got this that's going on, this a game that's playing here. And now you actually have here where we got the massive push up from. But you also have this as an area. Why? Because we saw that it was really and truly resistance. So what we're anticipating is that price may come back and tap on this area, making it support, right? Before it bounce higher. That is a possibility. It's not mandatory because you can't tell the markets what to do, but it's a strong possibility that we'll get a push down here to get some volume to pump price higher. All right. So literally, these are the rules when it comes on to identifying your support and resistance on the chart. We want to see multiple rejections. We want to pay keen attention to where price is currently at and look for the resistance and the support around that area, as well as understand that we want to see price moving with a lot of volume from the swing highs and the swing lows. And that is going to kind of help us to zone in on those areas where we've got the massive volume pushing up or down from, right? So, with that said, and we've gone through the rules, I really want you to understand that there are different types of support and resistance. Now, you may be wondering, what is it that you mean, Kerry? What kind of support and resistance do we have? Now, there are four main types of support and resistance, and I'm going to be breaking them down to you. I could literally, switch, and let's say we go over to gold, right? Let's say we're over on gold. I want you to kind of zone in on this bit that I'm going to be giving you. Now, we know that gold has been moving massively into a trend, an uptrend, right? Now, in recent times, we've got a little breakout of the trend. So all of these are what literally everything is being shown here on the strategies and the different systems that we have when it comes on to support and resistance. Now, let me show you the first one. The first one is literally what we call static levels. Now, static levels are those horizontal support and resistance lines that you draw. And I want you to understand that support and resistance is not one price, it's an area or a zone, right? Now, what happens is that we look on historical data. So if I zoom in on gold, where we are currently at, which is here, we've got massive resistance right at this area here. And if we look to the left, we'll see that this was actually support prior to the breakout. Okay, so let me put that box here because this is where we're currently at. There we go. Okay, hope you're seeing clearly what I'm showing. So here, rejection here, rejection here. But guess what? This was previously support. The support was actually holding. So this was a floor to price, but now it's becoming a ceiling. We're failing to break above this area now. So this is a plausible area for us to zone in on, which is anywhere between 29.25 coming back into 29.19, right? So you've got to pay keen attention to these areas. All right, so we're looking for price to show us that we've got some rejections here. So literally, I love to identify these zones because you know what? We get a lot of bounce coming from here. So the likelihood, let's say we're here and we're seeing all these rejections, what could be a potential is a short position. So let's say we line it up like so, ensure that our stop is there, and we're going to be targeting this support area because price is being supported right here, right? So let's see. That gives us about 1 to 3, which is absolutely incredible, right? So let's just put here because we've got rejection here as well prior. There we go. Okay, so this is what it would look like for a simple setup, right? A simple setup. You want to identify these areas and make sure you're seeing where these zones were previously support now becoming resistance, seeing these rejection, massive rejection from the area. What I'd be looking for here is an actual sell, and I've lined that position up. We can keep tabs on it as the video progresses, but literally that's what it would be lining up as. Now, when it comes on to the static levels, these are horizontal areas that we kind of zone in on, right? Support and resistance being horizontal. Now, right now, these are our key areas. Right here where we've got resistance, now we've got support here. So I generally, when I'm trading, I target from zone to zone so that we get enough movement and pips from the move. Okay, so that's literally one way in which we can do or support and or resistance. So static levels, this is the norm. This is the way how the majority of traders out there actually do it. But you do have other levels in terms of support and resistance and how you mark them up. So our dynamic levels, that's the next one that we've got. These are, factored by our EMAs, right? Now, if we pay keen attention to our EMAs, even in this zone, you'll realize that what we have a lot that goes on with the EMAs is that EMAs can actually filter support and resistance. Now, if you look, I'll zone in on the EMAs so that you can clearly see. Right now, price is being supported by the EMA, right? It's being supported, meaning that, price is being carried by the EMA. It's sitting above the EMA. That's supporting it. Now, once we get the rejection of the EMAs, look at that. That's our resistance, right? That's our resistance. So the crossover generally gives you that level of resistance where you bounce off that EMA, right? So I want you to understand that whether you're using the 50, the 200, the 8, the 14, it doesn't matter. Generally speaking, EMAs are support and resistance systems, and they show you what price is actually doing. Once we're actually on the you know area here, you can see there are massive rejections. We're getting some resistance of the EMA and we're pushing down. Each time we tap on it, resist, we push down. But here, price is being supported. So once you get this support system, you're buying. Once you're below the EMA and you're getting these massive rejections off your EMA, that means there's great potential for you to sell the market. So your support and resistance areas, they actually pick up a lot on EMAs. So even if you don't mark your zones, with the static levels, you could literally use these as dynamic levels to filter in and factor in your support and resistance areas, right? So if you didn't know that, this is really what EMA does. It shows you what the market is doing. It shows you trends. It shows you when the market is rejecting. Look at this. Look at this. We were above EMA, above, supported. It was supporting price. Came below, had rejection, pushed up, but there wasn't a lot of volume. But look at this. Look at this massive movement below. And now we're having a lot of resistance right at the EMA, multiple areas of rejection right here, as you can see with the wicks. And then, of course, we've got a massive candle pushing down from the EMAs right here, and that's telling you there's a lot of selling pressure, and of course price is actually having a lot of resistance right here. All right, so that's telling you a lot. Now if you look, you would see that we push back up. All right, but guess what? Look at this doji. Massive rejection here again. That's a lot more of rejection and resistance that's going on along the EMA here. Price is actually just pushing back below the EMA to show you that, listen, we want to go down. So you're paying keen attention to these dynamic levels. Even if you remove all of this or all of this, literally you can use your EMAs as your go-to show you what price is actually doing and to give you that guideline for support and resistance. So now we're back into the EMA, and of course rejection again. Rejection again, a lot of resistance that's going on. So moving averages, whether you're using 8, 14, 50, 200, it doesn't matter the length, 20, all of these EMAs act as support and resistance. They either carry price or they're pushing price downwards. When you get a top of the EMAs, you can get a lot of buying power, or you can literally get a lot of selling pressure, you know, depending on where you are. But it's for you to see these crossovers, it's for you to see the volume and to execute once you do. All right, so literally this huge, engulfing bearish candle alongside the doji, this is a massive sign to go sell the market. And if you did, even if you waited on the pullback to get this rejection right here, this would be you setting up your short position right on the massive rejection here and putting your stop right above the wick of the doji, and understanding that you're looking left and look at it. When you look left, you're finding what's your next zone. Look at that, beautiful. And then you'd be targeting there as your take profit. If you want to stick to your 1 to 3, all the better. You get your profits and you get out of there. You want to be looking for all of this, and it's all support and resistance. But you're understanding candlesticks, you're understanding the different dynamic, static, and all these levels of support and resistance to take the opportunity to get in the market and clock your profits. So we've looked at static levels, which are the horizontal lines. Now we've looked at the moving averages forming support and resistance with dynamic levels. Now I'm going to show you very, very simple one. This one is trend lines. So for those of us who understand trend lines and channels, it's really simple. If we're trending down, it means that we're moving downwards and price is selling, right? So if we take a look at UJ here, we've got a nice move downward. I want you to understand that this is simple. Use your trend line, and if the market is moving downward, your trend line, you generally draw it to the upside, right? And you want to get as much taps. You're going to have some slippage here and there, right? But you can also make emphasis on the downward area, right? On the lower lows that price has been creating. Look at that. Now, what do you notice? Look at it. Each time we tap the trend line that I've drawn, we're either getting buying pressure or selling pressure, depending on where you're looking at. So on the upside, we're getting massive selling pressure. We have a little bit of slippage because this is going to be where you're getting that literal opportunity to zone in and wait, right? So even though we know this is the trend line, we don't just take it at the top of the trend line. We wait for price to show us the confirmation of what it's actually doing, right? So I want you to understand that trend lines and channels, they literally form support and resistance. Look at it at the upside. Each time we tap the trend line, that is our resistance area. We're having multiple rejections on the upside. And then if you look where we're forming the lower lows, each time we tap the trend line, price gets a lot of buying power and it pushes back up. So literally, this could be your go-to in understanding trend lines and channels. When you draw these, you have to be able to see what price is doing and where we get some amount of ceiling and some amount of floor. So this would be our floor area for the trend line. This would be your ceiling. Each time we come here, we're failing to break above. We're actually just, working in this channel and making nice movements up and down within the channel. So you want to look out for these, to track your trends. Look out for signs, look out for these channels, look out for trend lines, look out, because identifying these areas of support and resistance, that's where the money is at, right? That's where the money is at, coupled with, understanding price action, understanding candlestick anatomy, coupled with all of that. Trust me, you're good with making money. You're good with making money. So if I zoom in, right, and we're here, the mere fact that this doji came right here, then you saw the engulfing candle forming, then this would be your sign to wait, so that price shows you what it's made of. Now, even if you waited until we get, because this could be a break, retest, and then continuation, so you would wait. Once you wait and you see that, price is moving back into the trend line, you literally could have the opportunity to take your trade here and you aim for here where we were before, which is, let me do this with a short position tool right here. Even if you waited on the moving average crossover, right? One to one, that says one to one, you could literally move it into a 1 to 2 by understanding that we're moving down. So we're going to bypass this and create a lower low, right? We're literally going to be creating a lower low. So you could do a 1 to 2, you could even do a 1 to 3 and target price going lower, right? But literally, you want to be able to clock these opportunities, and you can use all these levels of support and resistance as confluences to take your trade, right? So one, we have the trend line being tapped, right? That's one. We're respecting the trend line, even though we had a bit of slippage. Now we also have the dynamic level, which is our moving average crossover, right? So that's another. And look, the entire anatomy of the candlesticks is literally pointing in the direction that we're about to go lower. So that's three confluences. You better get into this trade and milk the markets to go downwards and create a lower low, right? Because if we're in this channel, yeah, we can break out at any minute, but this is telling us it's moving down, right? So we're taking opportunity on the downward movements as much as we can, because price is literally in a downward channel. So we're looking for sells in this regard. Okay. Now, apart from static levels, dynamic levels, trend lines, and channels, I want you to understand that there is another level that's known as psychological level. Now, you may be saying, Kerry, what is that? What are you talking about? Now, I want you to understand this one. Why? Because psychological levels are very important. This is where the banks play at these levels. Now, what they do, they like whole numbers. Now, instead of us being right here, we can use a horizontal ray. We have to understand that the bank plays around areas that are whole numbers. So let me just use my horizontal ray. Let's say I tap this area here. I could literally click on it and put 155, right? They'll play around areas like those, right? And we'll get sells from there or buys from there. I want you to really just understand this. Banks love these whole numbers. Okay. Let's say 150. Let's find 150. Most likely, we had some movements there as well, right here. So let's put horizontal ray at this area and we'll put it directly at 150. Okay. So look, we directly, came here at 150 exact and we sold off again. All right, we sold off again. So what you want to understand is that psychological levels, these are levels where the banks they generally play at. And you just have to understand that these areas, you'll get a lot of movements around these areas. So if we kind of switch it up, because I like to go on different, currency pairs so that you realize that this is not just one size that fits one shoe, but it fits all shoe on the market. Right? So support and resistance. Here, literally, you can see where we've got price failing to go higher here. So you'd mark out this area here. And you can look to the left to see if you've had rejections there prior. Most likely you did, and that's why it's failing to break there. So look, before we were actually here already, right? We were here already. Look, we were support, broke through, retest, became resistance, pump down. We're back into the area again. All right. And we're literally having some amount of rejection or resistance that's going on right there. Now we want to look at where price is currently at. So price is here. All right. This was our actual swing low that we moved massively from. So it was here. And this has good support. So let's highlight here. All right. We have a support area here. But what I noticed is that we had resistance here prior. And this is where we had the breakout from to get into this area, right? So we were here and we had multiple rejections right at this area here, broke through it, became support previous to resistance. Look, 1, 2, 3, 4 bounce resistance, then broke above it, retest, and of course, voila. So I want you to understand these because these are, go to in terms of making profits in the market. So what I'm going to be getting into, so even though, yeah, we understand that we've got psychological levels where the banks play at, and these are whole numbers, depending on whatever you're trading, find those whole numbers because the banks generally like to play around them. Now, how do we really and truly, how do we trade support and resistance? So now we know what it is. We know how to identify it with the multiple rejections, looking for areas where, we've had support becoming resistance and vice versa, right? looking for areas where we've got massive volume, so price pushing massively from the swing low or from the swing high, right? These are all ways in which we identify it. Now, I'm going to be talking a little bit about how we trade these based on understanding the concept. Now, it's fairly simple, very, very simple. So if we're in this movement here, price is actually, rejecting here. And this is one of my favorite strategies. I do this almost every single day in my trading, right? We are having rejection at this area, and I'd spot the rejection, right? Once we come back into the support area here and we're bouncing, what I'd be waiting for is a break above this red area here, a retest, and this is my cue for entry. So once I see that, I could literally even decide that, listen, let me move down to my 15-minute, right? Move down to my 15-minute, had the break, had the retest, and if we zoom in, because when in doubt, we look left, but we also zoom in, right? We could literally see that we are having multiple bounce from here. We're failing to go back down. So what I'd be doing, I'd be setting up my long position right around this area here, right? Putting my stop like so. Hold on. Yeah, just about there. Because I know that if we break and we come back here, chances are we're going to be continuing downwards. So stop right here, and I'm actually going to be targeting 1 to 3, right? Could get 1 to 4 because if we looked there, but I'm not going to be greedy. My thing is generally 1 to 3, so I'll stick to that. If I can get more, I'll take it still. Right? So, and would literally be in profits, would literally make the full TP and you know what, make profits on this one. So I want you to understand that you're looking out for these. We're looking for areas where we're having massive rejection, which is or resistance areas, right? Or support areas, and we're waiting on price to break above or below. And oftentimes, if you're having these, support and strong resistance and support during a day, most likely within the New York session, you're gonna get a breakout of that support or resistant area. You have to understand how to look for it and when to look for it. All right. And you can get all these scopes within our Discord. So feel free to join our Discord. And by the way, if you're getting any value, if you're liking what you're seeing so far, be sure to hit that like button. Be sure to hit that subscribe button. And let's continue on. Right. So this is one, which is literally a breakout and retest strategy, right? So we could look for break and retest, and this would be a very nice one so that you can clock profits, waiting, you're sitting on your hands and waiting on the market to break out of the, resistance or support area so that you can actually get a fly or a drop. Okay. Now, another way, if I come into this area, right, I'm going to use here. Let's say this is where price is. I'm literally just going to be trading bounce. So we've got a strategy that's called bounce. And what you look out for is for price to get back into your support or resistance area, and you're looking for price action to give you confirmation. Now, because we've got our EMAs on, that's another confirmation here. So look at this massive move down, right? All the way, we've got the red EMA on top, right? Now you realize that you're slightly getting the blue coming on top. Volume is a bit low, right? But then we get another dip here to kind of do a liquidity sweep. And this is one of the ways you've got to wait so that you avoid fake out, right? Avoid these fake outs. So because the volume is low here, you'd be waiting on price to say, you know what, the real volume is coming in, right? The real volume is coming in. So when we get the liquidity sweep of this zone, because oftentimes we do get it, right? And this is one of the strategies where we wait so that we avoid false breakouts. We wait, get the full confirmation, and then look at the blue sitting nicely above, right? Sitting nicely above. Now, because this is or was a resistance area, you are having some trouble to break above it. So that is why timing is very essential, because this move on GJ came right at the start of the London session. We did a massive move upwards, and that is why it's very important for you to understand when you trade. So for me, the bounce strategy, you've got to be looking at the opening sessions. These generally, you generally get these nice bounce, but you're gonna have some manipulation, and that is why you have to look out for the fake out trap, right? For the manipulation bait, and wait. Sit on your hands if you must. The opportunity, it will not run, it will not go past you, it will not fly over your head, you will not have FOMO, you will not be missing out on profits. Just be calm and allow the markets to come to you. All right, I promise you'll make money. Just be calm. All right, don't rush it, allow it to come to you. So, this would be your go-to. And if you look on price action, it's not choppy, it's very clean. Doji, right? We've got that nice hammer, bullish engulfing. Bam, we're in this trade, targeting this area here. Get our profits and we're out. So this is the bounce. And we're looking for the bounce from our areas of support and resistance, right? So we would target here. We would need to be that low with our stop, so we could adjust so that we can get our 1 to 3. Yeah, there we go. Perfect. So the bounce strategy, we're looking for a bounce off or support or resistance areas. And we're waiting. We're not just hopping in, because that's another, effective strategy. The wait, the patience, it pays. Don't rush it, because fake outs are real, and you generally get those liquidity sweeps so that they wipe out the retail traders, and then they send the market in the right direction in which they want it to go. So don't fall for that. Don't be hasty. Wait. All right. So that's the bounce strategy. All right. Literally, you will have, the bounce, you have the break and retest that I've just shown to you in the one setup here, and literally the fake out trap. I've also showed you the fake out trap, which is you're going to get this bit of manipulation. Look out for it, wait for it. And once you wait for it and you see it, smile, and then you enter with smart money. You enter with them, because guess what? If they're buying, they're often gonna, push the market in the selling direction to wipe out and get some liquidity. Don't become the liquidity in the market, please, because you don't want the smart traders are gonna take your money. And we don't want that. So we want you to be profitable. We want you to understand that the move is not going to miss you. There is opportunity. It's going to present itself very clearly, especially if you're really patient enough to wait for it. So that's the fake out trap, that's the bounce strategy, and that's break and retest. The final one is understanding that you could literally use your RSI as a combination, because look, we understand that support and resistance, it doesn't have to hold, and that is why we use all these confluences, and we play the books how the books present itself. We play the candles how the candles present themselves. We don't impose our bias, but we allow the market to show us what it's made of, what it's about to do, and we take advantage of the move. I cannot stress that enough. If you're a newbie, don't be hasty, but listen, you're not going to be paying your money out to the brokerage accounts and not getting anything. You're going to be acting smart. You're going to be very patient, because patience, it truly pays. All right. So the other one is combining the RSI with your support and resistance zone. So if I pop on my indicator here, all right, I could literally add the stochastic RSI, or it could be the regular RSI, which is the relative strength index. That's fine. And with that, you could literally look at this area here. Look, we were oversold, got a nice crossover, and of course, we're pushing. So you get a nice confirmation right at the same area where you've got the EMAs crossing, you've also got the bullish engulfing. So you've got so much confirmation with your support and resistance. And a lot of people will say, I don't trade support and resistance. Support and resistance is the entire market. So if you understand it, you'd be able to make money from it. You just have to understand what you're looking for. And I've given you a full blueprint as to what to look for at these areas. And I know this has great value. So I hope you've made notes. Literally, this is the end of the video. I've walked you through the different types of support and resistance, how to take a trade using support and resistance, how to look out and master these areas so that you can be making profits and you're not, falling for the fake out trap, but you're being patient enough to allow the markets to come to you, to utilize the different strategies and the tools based on what the market gives you. All right. With that said, you know what? I always encourage you to put God first in everything you do and drop it in the comments. What support and resistance strategy do you actually use on your charts? Right? Let me know. Do you love the dynamics using the moving averages? Do you love the statics using those regular horizontal lines? Do you love the trend lines and channels? What do you really look out for on your charts? Drop it in the comments down below. And remember, if you've got anything that you want me to cover in my next video, I'll be sure to, do that one for you. So drop it in the comments down below as well. And remember to hit that like button. Remember to subscribe. It is FREE. Don't cost you nothing. And we're dropping value here at least twice or even 3 times for the week so that you can be benefiting and becoming an even better trader and make money consistently. And remember, click the link in the bio or in the description below. Join the free Discord and come say hello to the team. We're all here. We're all stars. But if it is that you want to join the VIP family where we do a lot of wealth building, we don't just do Forex trading. We literally even talk about the stock market, give you stocks to buy, ETFs, and all of that, then you can literally even click the link in the description down below to join our All Stars Wealth Academy where we build wealth one day at a time. Now, with that said, carries out. I love you all. I appreciate you all. If God is in it, you know you must win it. So put him first in everything you do. And I'll see you on the next video. Bye.